Boy, that time flies when you're having fun, doesn't it, guys? It's about that time of day again, isn't it? You thought you were getting rid of me. I'm not going away that easily here. We're back again Monday night, Monday evening. It's February the 11th, 2019. My name is Joseph, and this, of course, is your nightly newsletter. You know, I help traders of all shapes and sizes earn consistent, reliable, predictable, dependable, usually profitable, right, trading results using a simple three-step trading strategy that we execute together every day in our daily trade room. But tonight, my job tonight is to find the most reliable, most predictable setups for tomorrow. We got crude, S&P, Nasdaq, gold, and we'll wrap up tonight on that mighty euro. I want to start off here this evening, though, on the oil market because the oil market has a lot to talk about tonight. We get a range, a trend line, reversal lines, hidden channels. I think the most important thing setting up right now on this oil is the fact that we are coming out of a range. And you know, we drop below those ranges, those pendulum swings, they love to run back in the opposite direction. So I've got a bull momentum going higher here right now. I'm trying to find a way to buy this market. Got my eyes on some key support trend lines, some key reversal lines, some key trend lines. I'm going to break down 3, maybe 4 different buy setups, trying to get long on this oil market. Time is of the essence because as we get higher, we're going to start running into sell territory. So make sure you stay tuned on that here for a breakdown on the oil. Over on the S&P here tonight, S&P is a bearish market with what we call, a bullish market, what we call a bull flag. Strong move up into a bull flag. Now, many of you guys might be wondering, are you sure, Joe? Are you sure this market is bullish right now? It is. There is one very important clue on this chart that tells me it is still a bull market. We're going to break that down, go over the reasons why in just a moment. But the bottom line is I'll bet there are a lot of people right now that think this market is bearish. I'll bet they're going to be trying to sell as this market goes higher. And I'll tell you what, I'm going to try to buy right into those stops as they fail for that retest and possibly a big measured move going into tomorrow's session. We're going to find a couple of ways to buy this market, and we'll also plan if the market collapses here as well back down. We get buy side and sell side on this S&P. How about the Nasdaq? The Nasdaq is bearish right now. This time, and again, very small difference between the Nasdaq chart, which is a bear market right now, and the S&P chart, which is a bull market. And we're going to go over those details in just a few moments. Most important thing right now, though, is we've got a bear channel on this chart. It's a hidden channel coming off of those lows, and I would love to sell up in my sell zone up here because I'll bet we get a bunch of stops just waiting to get triggered from all those buyers who are buying into these pullbacks and leaving their stops hanging out right below today's low of day. I'm looking for some selling opportunities. I got a couple different options. If we go up, nope, that's not it. If we go up and back down, or if we go down and back up, I'm going to put the plan together here with you guys in just a moment there on that Nasdaq. Over on the gold here, what are we going to do? Measured move on gold. Anytime we see a measured move and a bounce, unless we get that 1, 2, 3 reversal, that measured move becomes a bullseye, right? Bullseye for those targets. Bears are trying to go back down to that 1307.1. The one big thing, though, right now is we do have a nice, strong, bullish momentum, right? Big, strong move up. Anytime I want to absorb that momentum, I've got a very specific entry pattern. I'm looking for the buyers here to try so I can sell right into those stops. I'm going to show you my plan for absorbing that bullish momentum and getting in short for that run back down to 1307 on the gold. So make sure you stick around on that a little bit later on in the video tonight. And then, of course, over to the euro, wrapping up tonight on this mighty euro. The euro is definitely bearish as it rolls lower. I've got myself pretty simple hidden channel here. I'm drawing off the lows. I'm bringing to the highs here. I'm thinking we might be able to get a sell off top of that channel, but in all reality, I'd rather wait for a little bit deeper pullback because there's one big clue on this chart, that big red candle. I'm going to talk about why that big red candle is such an important clue when you combine it with that big round number as we put together our plan to sell this market here tomorrow morning on the euro. Boy, we got crude, S&P, Nasdaq, gold, euro. Had a great day today in our trade room. room. Markets were a little bit sloppy, so we want to get ready for another big day tomorrow morning. Before we jump in, though, and put the plan together tonight, I do want to remind you, make sure you never miss a great video here at School of Trade. Head over to sidewaysmarkets.com. That's our trading blog, and make sure you join our mailing list. All I need is your name, your email address, and then hit that subscribe now button. And don't forget to check your inbox, because I'm going to send you a welcome email with all kinds of goodies so you can maximize your time with us every evening on this nightly newsletter. Oh, and speaking of which, tomorrow morning we'll be in our trade room at 8 o'clock Eastern time. If you can't be there with me tomorrow morning, the next best thing is to download all the charts that I'll be using tomorrow morning with all of our clients in the trade room. You can find a link right below the video tonight on our blog. There's a big button that says download today's charts. Grab those charts and get ready for tomorrow morning. Again, if you can't be there with me tomorrow, that's the next best option. And then how about some questions? Questions, comments, concerns, any other video suggestions that you might have. If you have any questions, comments, or concerns, that's what the comment section is for. So hit me up in the comment section. Let me know if you have any questions about the content tonight, the strategy we're using, or anything we talk about here. And while you're there, don't forget to subscribe to the YouTube channel and give me a thumbs up if you'd like me to see tonight. In the meantime, though, if you have any questions, don't forget that live support tool and that toll-free phone number up in the upper right-hand corner. Right, call that toll-free phone number. As I always say, right, I'm old school here at School of Trade. When you call the office, we do actually answer the telephone. It's a real human being that actually answers it. I know I'm old school. I know most websites these days are all chat-botted up and all, connecting you to different countries like that. I'm here in Los Angeles. The rain has finally stopped for a couple days here in LA. I look forward to speaking with you anytime you call the office. My wife Megan and I are always here standing by. But enough of that, though. Let's roll those sleeves up. Let's get to work here. Feet off the desk, eyes up here. I told you didn't think you were getting rid of me that easily, did you? Do you think I just left, right? No, not at all. Back in the action, though. Tomorrow's Tuesday. Let's get ready for Tuesday's session. Monday was a great day, but as always, we're only as good as our next trading opportunities. We don't have a lot on the calendar tomorrow. As I look over the schedule here for tomorrow, Tuesday, February the 12th, you can see all we really have tomorrow is that JOLTS report, really. We got some news in India, right, and some news from New Zealand. I don't think that's going to be too much of a big market-moving event here this week. JOLTS report tomorrow at 10 a.m. Eastern Time. I would assume you're going to get the meat and potatoes tomorrow between 9:30 and 11 o'clock around that job openings, layoffs, and transfer survey. Let's also not forget too, right? We're now moved from the White House to Beijing. We've got the U.S.-China trade talks. We're still listening in to see if we're going to hear anything from those. We didn't get much out of it last week. The market was very much waiting on it last week. This week, of course, we're just waiting to see if we're going to hear more about that. So we'll be definitely keeping our eyes and ears open tomorrow in our trade room for any unscheduled news that might hit the news wires. But of course, as of right now, that 10 o'clock JOLTS report is going to most likely be our big market moving catalyst tomorrow morning. So again, we open up our trade room 8 o'clock Eastern time. Hope to see you there with me. If you're not there with me tomorrow, though, don't forget, pay attention to that 10 o'clock hour, because that will be most likely, right, the big catalyst for tomorrow morning. All right, let's jump right in. We'll get a schedule here for tomorrow. How about some oil here? Let's grab oil, S&P, Nasdaq, gold, and we can't forget about that mighty euro. There are three big clues on this oil chart here for tonight. The first clue is this bullish momentum. Nice strong bull move going higher. Anytime I have a nice strong bull momentum, I want to buy at support. Where could I find levels of support? Well, I've got a level of support coming off this prior swing. We call these reversal lines. That is a key level of support at 51.97. I've also got a prior resistance trend line coming down. Well, that's going to be a level of support as well. A variable levels of support, obviously. That might be a little bit higher or lower once we get there. And then, of course, how can we forget? Anytime I see that reversal off that low, right? Mark up those two highs, bring it down to that low, and that creates a key level of support as well. So we're bullish right now. I want to be a buyer on oil, and I want to buy that pullback. So I know where I want to buy, but what's this market trying to do here? Well, it all comes back to last week and how we ended the week inside of that nasty, grindy range, if you recall, right from last Friday morning. Bottom line is now we've got this big breakout, one try, two try, and now we're going back into that range. But here's the way that ranges work. Ranges don't usually just stop, right, when they get back into that range. They usually end up swinging back in the opposite direction. I call this a pendulum swing. So when the price goes lower, right, it oftentimes snaps back higher, and that pendulum will swing all the way back up in that opposite direction. So of course, as I look at this chart right now, I've got a big old target up there at 53.57 and 53.72. Those are the hot spots here for tomorrow. The problem is that as we go higher here, you're going to start seeing a lot of sellers coming in as the market goes higher. Why am I telling you about that right now? Because if the market does not pull back here for us, we've got to be careful buying into resistance. And if you watch my newsletter every evening, you probably can finish, right, the plan for as the market goes higher. But let's break this down one by one here as we go. First step is I want to see a pullback so I can buy off a level of support. So now that we know where we are right now, let's dig into this. What would be one scenario we could look for? Well, let's call it two scenarios, and that two will probably lead to three or four once we break this thing down. Here's what I see first of all. I see a strong move up. I see a shallow pullback. If we drop off this high right now, this will create what I call a two-legged pullback. Two-legged pullbacks are really very basic. One leg, two leg on the move. What that does is it creates this falling level of resistance, and these falling levels of resistance, they end up becoming support on the opposite side. So that's going to be what I call a two-legged pullback setup. And again, it's just the 1, 2, draw that trend line down, and then use that trend line. My nickname for this one is called a 2LP. The first buying setup I'm looking for on oil, down around the low of that range, down on the low of that channel, inside that buy zone, or at levels of support, I should say, is going to be that two-legged pullback. Now, that two-legged pullback is usually the first of two, maybe three more setups. For example, let's just say, we get that second leg lower. We get that trend line coming down. Now we get that second try. From that two-legged pullback now, think about now where the stops are for those sellers. They're right above that high, right? Stops are sitting now right above that high, and this is where we set up for our failure pattern. That goes into a failure pattern from there. That's our second setup here as we go. One of my favorite patterns is buying in a bull market, buying into an area where I know there are seller stops hanging out there, because when seller stops get triggered, what happens? They become buyers, become aggressive buyers, and price will spike higher. Now, once it starts spiking higher, I don't want to chase after that move higher. Now what I'll do is I'll look for a pullback right back to the very same location again. This is why we don't like to move our stops too early on these trades, because they oftentimes pull right back into, as you can imagine, a pullback setup, which is oftentimes off those highs, off that low, oftentimes is a hidden channel variation, right, of that pullback. Now, where do we go from there? Once we get that pullback now going higher, then as we go higher here, I don't want to buy high up here, right? I don't want to buy high up here because, again, there are going to be bears up top here. So what do we do as we go higher? We look for traps. We look for traps, trap patterns in a bull market. Anytime I want to avoid buying into resistance, I look for trap setups. So again, we have that 2LP. We have that failure pattern. We've got the pullback pattern. right? And don't forget those traps, right? Traps are so effective when you've got a nice strong bull momentum, but we don't want to buy into resistance. Look for those traps. The traps are usually the last piece of this puzzle. Add a nice little cherry on top, right, for the move going higher. Again, don't get aggressive as it goes higher here because you're buying right into levels of resistance because, again, a lot of bears waiting up there to spoil the fun for those buyers. So buy those pullbacks. Now, I know what you're thinking right now. What if this is a short covering rally, right? What if all these sellers who are still holding on for dear life right now, what if they give up on this? What if this thing just starts really running as it goes higher? Then what do? Exactly the same thing we did before. We look for traps, right? I don't want to buy high. I still want to buy low. I'm looking for trap patterns below prior swings. If we get these to really pull back, if it really pulls back, I'm going to look for that failure pattern, right? That failure into a pullback, right? And then, of course, up we go from there. Same basic idea as we talked about before, right? Same basic idea as before. So if this thing does not pull back for us and give us those sequence of 4 setups off the low, then if we keep going higher here, well, now the gig is up, right? We know it's a short covering rally. We know when the market gets aggressive, we've got to get aggressive with it, which means we start looking for traps. We look for failures, right? And we buy on that pullback, right? Again, we're not going to chase after this market just because the buyers have it going higher. One more thing here. What if we go sideways here right now? Okay, sometimes we'll see a market that is in a range start to morph into another range. What do we do if the market starts going sideways here, right, on that chart? Well, in this case, it'll be a bull market into that sideways range, which basically tells us to buy in the same exact location that we've already planned for. The only difference now is we want to use a specific, it's called a 2-try failure pattern, a 1-try and a 2-try. I want those bears to try once, show me twice, and then we'll look to buy right back up. So boy, have we covered a lot in just the first 15 minutes of this video. We've talked about direction, we got targets, we got location. I've got the 2-legged pullback, the failure pattern, the pullback, and what was it again? The trap pattern, which is great so you're not buying into resistance. Now, I want to go into a lot more detail about these patterns, but if I do that, I'll be here all night, right? And you guys won't stick around that long, right? Well, yeah, I got to keep the video as short as I can. So to give you guys a much deeper dive into all of my favorite entry patterns, in fact, everything that we do here at School of Trade, I'm going to give you guys a free trading class. There's a big button that'll pop up in the upper right-hand corner of this video. Grab that link, pause the video, register for the free class. I'll see you on the inside of the members section of our website where I'll kind of peel back the curtain and show you what we're all about and the patterns that I use every day in our trade room. Now, if you're on the blog right now, there's a big red button right below the video tonight. If you're on the blog here at Sideways Markets, just look below the video right now, and right below the video, you'll find that big red button that says join the free class, and that will take you right to the website where you can register, right, for a great price of free $99. That way I can keep moving, but you can get the deep dive that you need so you get the most out of our time together on this nightly newsletter. We're looking good. Crude's looking great. How about some S&P right now? Crude looks pretty easy. How about some S&P? What's the plan here on the S&P? Okay, a little bit of a curveball on the Emini tonight, right? We got 3 big clues. One is that big bullish momentum here, right? You can see a very strong bull market going higher, right? But the most important clue is what didn't happen. While we pulled back, you'll notice the sellers never really get a good jump off the moving average. Remember, how do we know when a bull market turns bearish? A bull market turns bearish with, what is it called again? The 1, 2, 3 reversal, right? It's got to go below the moving average and it's going to jump off that moving average. Once I see those sellers start to attack, and to be very honest with you, those are more the buyers getting out, right, than the sellers getting in. But it feels like the sellers are just crushing it lower. And again, it's mostly buyers giving up on it and allowing those sellers to bring this market lower. So if I start seeing this market jump off that moving average, now we know it's a bear market. Look at the chart here tonight on the S&P. All of this bullishness going higher, there's no doubt about that. But where is it? Do you see them jumping off the moving average? No, I don't. Therefore, I know that every time the market goes lower, right, buyers are buying into it, buying into it, buying into it. In fact, the buyers are probably trying to get a little bit lower so they can load up the guns, right, and go back up to retest the high. Now, when it comes to a flag pattern, there are two basic patterns or two basic rules you want to follow. As we go higher on a flag, there are two basic places where you want to be looking for those buying opportunities. And again, you're assuming here the market is still bullish. It hasn't collapsed yet. It hasn't separated off that moving average yet, which means we're still a bull market. Two spots to look for it. One is below the low, and two is above the high. Now, the one below the low we're looking for is a failed breakout below that low. This one takes some cojones, right? This buy down here requires a failed breakdown. It requires the sellers to clearly try to sell the underbelly of that channel. If you ever see an overshoot of that low followed by sellers trying to sell off the bottom of that channel, right, you can look for an easy entry as it snaps back higher. Now, that's the one that takes some cojones. That one definitely does take some, right? It takes some confidence. The next one is the one that I'm going to show you because this is one I'm looking about for tomorrow. The next one comes just as we start seeing, right, that little trap area up here. Now, remember, at this point, a lot of sellers are going to be thinking this market is bearish, and they're going to be trying to sell, right, up in those levels of resistance up overhead, right? So lots of levels of resistance up here. As the market goes higher, what's going to happen is those bears are going to try to sell it back down again, right? That's the goal. The goal is let those sellers try to sell it and then buy right into their stops using the top key. Here's the key here. The top of that channel as your level of support. So you're waiting for sellers to try to sell this thing, then you're buying right into their failure. Does that make sense? Right? So two ways for the flag pattern. One is the overshoot snap back into that channel. That takes some experience. The second one is a lot easier. Wait for those sellers to try to take this market lower and then wait to buy off the low of that or the high of that channel right into their stops as we go higher. The best part is the measured move right becomes the big target, which means it can be a really big wide target here for us. So here we are back to our chart now. Strong move up. I don't see anywhere the bears take control of this market. That does not mean that it can't become bearish in the next few hours here overnight, but as of right now though, this is not a bear market. Knowing it's not a bear market right now, the next thing I'm going to do is I want to anticipate where do I think those sellers might just come in here, right? They're probably going to come in inside that trap zone. See, in a second, I'm going to show you the Nasdaq because the Nasdaq has one very small difference that is ultimately giving me a completely different plan for that Nasdaq. So again, imagine if this market was bearish, or let's put it this way. Put yourself in the shoes of the sellers who are thinking this market's bearish. Where, if I was a seller right now, where would I be trying to sell? I'd be trying to sell with traps, right? I wouldn't want to chase after it. So of course, anytime I don't want to sell low, I look for traps. And so I'm anticipating right now, you're going to see quite a few bears, right? Hopefully not as many as the bulls, who will try to sell into that trap zone. And let's say right now, let's say you completely disagree with me right now. Let's say you think I'm crazy for calling this a bull market. If you want to sell this market, that's where you want to be selling it, right? Trap high and back down. What my plan is to watch this thing unfold. For example, get rid of that battle zone there for us. As we go higher here, I'm expecting those sellers to try to sell into it, pull back, and go from there. Right? We also have that trend line coming in as well, and that will help aid in the process of buying at support. Buying at support, right? The market's bullish. I want to buy at support levels. Where are support levels? The high of that channel, right? The trend line coming up here below. And the best part is that if those sellers get in short there, all those stops now will start getting run. Now, I got to be honest, guys. A lot of times we don't get that deep enough for pullback. It goes something like this, where it goes running up and jumps up. Then what do? Do we buy up there? No. We don't want to buy high because the target is up there, right? The 21.5, that's the target. I don't want to buy into resistance. What's the pattern? Trap pattern, right? I don't want to buy into resistance. So what do? I look for a trap low. right? That trap low may end up deeper pullback into a failure, right? Same pattern we talk about on the oil. So again, the best opportunity here is going to be an up, back, and go. If we don't get the up, back, and go, if we don't get that breakout pullback to buy off that low, if it just pulls back and goes without the pullback to the support level, then I resist the temptation to jump in early. I wait for that trap, and I look for that trap, right, as we go. Right now, that's if we get the market to pull back, right, and give us that nice setup. What are some other options that we want to be considering? How would this market turn bearish? What if we go up and we slam lower here? If this thing goes up and gets crushed coming back down again, obviously that will prevent me from buying, right? But that will turn the market bearish. Usually in a flag pattern, you're going to see 3 legs. 1, 2, 3. So at this point, if they go up and back down again, this will likely turn to a bear market. What is the plan then if the market turns bearish? If we go up and then back down again, this whole channel will likely fall apart, and we'll likely get rid of the channel here, just for a second here real quick, right? If we go up and back down again, this will probably turn into a spike in channel. Spike and channel patterns are very, very easy. Mark up that low, mark up that high, mark up that high, that hidden channel high, and we'll look for that sell off of that high. It's very important that when we want to sell, we're selling during bearish momentum. So I have to wait for the market to turn bearish. I have to wait for that jump off the moving average, which we're not seeing here right now. Bull market until proven otherwise. Again, I want to be a buyer as we go higher, right? Buying as we go higher off of that pullback or off of that trap. But if we collapse here, this channel will literally evaporate. And what will usually happen is, oh, wrong hotkey there, right? It'll start really running lower. Once it runs lower, mark up that low, mark up that new channel, find that new channel, and looking to sell right off that channel high, because now our target is back down to retest that low, right, from last Friday's trading session. Now, I've got one more thing I'm watching here, and that would be if this continues going sideways, right, inside of a trading range. If we continue going sideways here inside this range, you'll notice it's starting to get relatively flat right now. If we continue this move in the overnight session and we start going sideways, well, now that's going to basically absorb both momentum, and we'll be pretty much balanced. I've got that big run up, that big run down. So if we keep going sideways here on the S&P, forget the longs, forget the sells, right? We're doing both tomorrow. What we'll do is, if this does turn into a big range here for us, I'm going to take the range expansion up. I'm going to take the range expansion down, create that level of support above and below, and we'll try to use that level of support and resistance now for the 1, 2, buy it back up, 1, 2, and sell it back down. So again, if we do see this market continue here going sideways right now, keep your eyes on that range. Once we have that trading range, right, then we look to buy the low, sell the high, using what I call the 2-try failure pattern. Again, you can learn so much more about that 2-try failure pattern by grabbing that free course in the upper right-hand corner, or that big red button right below the video tonight on our blog. So now we know the plan here in the short term, in the long term. Now all we need is to get a little bit more information, right? A couple more candlesticks, and we'll see how this market plays out for tomorrow. How about some Nasdaq right now? Now look at the difference on the Nasdaq, right? The Nasdaq is really a very, very, right, big. It's a very small difference, right? But a very big difference when it comes to the plan here for tomorrow. You'll notice the Nasdaq still has that big bull run up. But now look what we're seeing here right now. Big, strong blasts right off that moving average. Sellers are coming in and really selling it off that moving average. No, it definitely hasn't collapsed yet, right? Like it almost always does when a flag pattern breaks down. But I'm assuming right now that everybody looking at this market right now is gearing up to be selling high here. I don't want to sell low. There are going to be some stops waiting down here, and I guarantee the buyers who bought off the low originally are going to defend this area. So be very careful trying to sell low here right now. Anybody who bought on these pullbacks is probably going to defend that area to try to defend their exits there before they give up on this thing. So I'd be very careful buying, or should I say selling very low here. I always want to sell high. Momentum is very much bearish right now on that Nasdaq. Anytime I have a bear market, and again, the big difference here is you can just feel, right, the strength of these sell candles coming off that moving average. There's no doubt about it in my mind here. These bears have control of this market right now. It's just a matter of getting them into position where we can sell at a good place for a low risk, high reward trade. So now that brings me into, right, that bear channel. We know we're bearish. I know I want to be a seller. I want to sell at resistance. Now, one place to sell would be the top of that channel. The problem is, if I sell the top of that channel, it doesn't exactly give me a very big risk-reward ratio. I'd much rather sell higher here because then I can get a much better, right, small amount of risk with a big amount of reward. And I'm also selling in a major resistance level where I would expect also you'll see buyers trying to chase this because of that potential flag pattern that is kind of the debate right now between the S&P and that Nasdaq. So again, we're bearish on the Nasdaq. I want to be a seller up at resistance, and I can see a couple different options here for us as we go. You might already see them already. I've got that trend line coming up below us, right, with the 1, the 2. I want to try to use that trend line as that level of resistance overhead. So keep your eyes open for that two-legged pullback on that Nasdaq, right? I also want to see if we can get this price to go up, get that moving average over, let those buyers now try once, try twice, and then, of course, look to sell right into those stop losses. See, that's what I'm talking about. I would imagine a lot of buyers here are gonna try to buy that pullback. And let's face it, they might be successful. And if they are, good for them. But if they're not, though, we have a much bigger space for a profit target for the bears right now than we do for the bulls, don't we? Right? Look at that. Much more profit to make going short right now than going long. And because the bears are in control right now, I can do that with confidence. So again, my stop losses will be right below that low, looking to sell into those stops, take the pullback, and run it back down. Again, don't move that stop too early, right, off that failure into pullback pattern, because oftentimes those pullbacks come right back up and then dump once they stop you out, right, at your point of entry. So bear market right now, bear channel. I want to sell high, right? And when I do that, I'm trying to rope in those sellers here so they fail and I can then sell right on the way down. Failures into pullbacks. And again, as we go lower, you're not chasing after it. What are you doing? You're looking for traps, right? Failure, pullback, trap patterns. Again, trap patterns are always the best, right? If we can't get in at resistance, the next best option is getting in with trap patterns on the way lower. But I'll tell you right now, usually you're already in off the failure or the pullback, and usually that trap setup is just a nice little sprinkle on top there to add to your position as this thing collapses. And it really could easily collapse here on that Nasdaq, right, for a nice big run all the way down, right, to that 42 and change down there, right? That could easily collapse all the way back down again. It could also easily run higher here too, right? What would that plan look like? You know, maybe I'm wrong. Maybe this Nasdaq isn't bearish. How would I know I'm wrong? Well, you'll see it right away. It'll go up, pull back, and go. Now, once you see it go up, pull back, and go, you know, okay, we're not bearish. But what do I do up there? See, I don't want to buy up there. What do I do? I've got to look for that trap, right? If we do run higher here, find that little trap low. Remember, trap patterns are always most effective when what? When we don't want to buy high, and we don't want to buy into that major level of resistance. All right, guys? And then again, if we do just collapse down here, watch that hidden channel, right? If we do collapse down here, watch that hidden channel. And of course, we'll sell right off the top of that hidden channel. These are always a little bit tricky, right? Because once they drop, you don't want to chase after it because a lot of times it'll pull back, right? Then you can sell. You don't want to chase after these drops. Sometimes they drop and never pull back. A lot of times though, right, they'll drop, they'll pull back, right? And that's when, of course, I can go in, grab those hidden channels, right? I can find those prior levels of resistance and I can sell off of those levels. The bottom line is, if you want to be consistently profitable over a long period of time, you've got to get out of the habit of selling low, right? Selling low isn't a very reliable strategy. Sometimes it works, but it's difficult to get lucky at the casino every morning, right? It's very difficult. You can get lucky chasing after moves every once in a while, but like going to Las Vegas, right, or Atlantic City, you're not going to get lucky every single time that you trade. Eventually, the law of large numbers, right, and the statistics are going to catch up to you, and the house will always win. So don't sell low, right? Sell high. And again, very, very important information here between the Nasdaq, right, and that S&P. You can see that S&P here, or the Nasdaq here, blasting right off of those trend lines. You look back at the S&P here, I don't see any of that strength right now. So I'm very much still bullish on the S&P, and I've shifted to the bear side on the Nasdaq. Let's keep going over to the gold right now. That yellow metal. Boy, what a crazy day today on that gold. My instincts tell me, and I'm not an instinct trader, by the way, my instincts tell me we're going right back down to retest that low. But never, ever, ever do not trust my instincts. Don't trust anyone's instincts. The last place we want to be trading from is in our stomach, right, or in our heart. We have to trade based on our rules. And the rules right now tell me go with the market's momentum, find key levels of support and resistance, and then combine those key levels with high probability entry patterns. For example, right, we got three big clues here. One is the bearish momentum, right? Let's get those measured moves up there so I'm not confusing you there, right? Nice, big, strong bear momentum. Now, why is bear momentum so important? Because it tells me direction. But wait. What about this move, though? Is that a reversal? It jumped off the moving average. It did, but what does the reversal do? A 1, 2, 3 reversal, right? 1, 2, we need one more leg. As far as I can see, this is nothing more than a measured move bounce. And anytime I see a bounce off a measured move that doesn't hold that pullback and run, I know the odds are pretty good. We're going to end up right back down to that measured move here sooner rather than later. Okay, now that big bull move there, that strong bull move is still very important. It doesn't give the bulls control. But that doesn't mean that these bulls aren't going to exhaust themselves trying to take control. Most important thing is, anytime I see a strong move in one direction, we almost always see it try again. That's exactly why this big move down, I'm expecting another leg lower, right? This is a good example here of a kind of a macro and a minor look. Strong move down, expect another leg. Strong move up, expect another leg. Now, based on the bears and the bulls, which would you have your money on, right? What do you think the odds are? Which, the bears or the bulls, do you think are going to be more apt to win this battle? Probably the bears, right? Looking at that big bear move down, something tells me they're flexing a little bit bigger muscles there, right, than the bulls are right now. So the bottom line is I do have to respect the bullish momentum, but if I'm going to choose right now between the bulls or the bears, it's a no-brainer as far as statistically speaking goes. I've got to go with those bears right now. Whatever macro or fundamental crap's going on out there in the world right now, forget about all that. Trade the darn chart. So as I look at the chart right now, the bulls have a definite shot to reverse this trend. There is no doubt about that. Strong move up. If we get one more leg higher here, we're gone, right? We're not a bear market any longer. And at that point, we will mark up that high. We will find that channel. I'll find that low, and we'll look to buy the low of that channel. Now, also, too, if we do get that big run higher here, it oftentimes will splinter off into a smaller channel. So don't be afraid to go looking for this as a smaller channel as well. Oftentimes it kind of, fractals right into a smaller little channel up there. So watch for that if we do get that run higher. I have no problem being a buyer, right? We never want to be completely nailed to a position, right? We always want to be open to whatever. But until we see that bull, those bulls take control here, I am not even thinking about being a buyer right now. What I am thinking about, though, is if I was a buyer. If I was a buyer right now, what would I do? Well, I would probably try to buy the pullback once. If that didn't work, I might consider putting one more position on at a lower price and trying it again. But I'll tell you, if I couldn't get the first try, if I couldn't get the second try to work, I would probably give up. In fact, that would probably think about selling now. And that's, of course, where I want to sell, right? I'm putting myself in the shoes of those buyers. If I was a buyer right now, I would say, oh, buy the pullback, trap low. If that didn't work, a lot of times what happens is these big lot traders, they'll do half their position there. They'll wait for it to pull back, another half there, right? And so that way they have their full position. That way they're protected if the market pulls back even further. But now all those bulls are all roped in, and now what we need is a nice strong red candle. We can sell literally right into those stops. Now, I want to go one step further here and remind you that if we sell down here, where's the target? The target's back around 1307. So if I get something like this, we go 1, 2, do I really want to sell down here? Probably not, right? Yeah, probably not. Probably not going to be the best place to sell down there. So what's a better way? Can we think of any pattern? I don't know. Maybe we've talked about it a couple times already. Have there been any patterns we've talked about that would help me avoid selling low or buying? Yes. Trap, right? So 1, 2, trap, right? 1, 2, trap. We also call these crown reversal patterns, right? These crown reversals, because they kind of look like a crown, right? You got that up, back, up. They kind of look like a crown. Work with me here, right? I know Bob Ross isn't here tonight. I'm filling in with him. It's a happy crown reversal, right? It's a happy little crown. But the bottom line is we go up once. I want to see him try once. I want to see him try twice, and if I can get that trap, boy, that will be just an incredible sell up overhead. I will also settle for, right, something like this, where we get a trap high from there, right? I would also take that as well. It would not be as delightful, wouldn't be as powerful as the crown reversal overhead, but that would be another follow-up pattern. Look for there tomorrow. And by the way, what is this? It's just a variation of the 2-try rule. We go up, we let the buyers try once. If it goes lower, you'll probably see some more sellers down here trying it again. But now, if they fail now, this probably will collapse here back down to that 1307. I just don't want to sell low, right? Let them once, let them twice, trap, sell back down, or let them once, let them twice, right? And then again, if it tries to get me to take that bait down there, stay away, wait for that trap, right? And then got them, right? Trap low. Those types of traps are almost a guaranteed winner. And remember, we go over them every morning together in our trade room. That way our clients never miss a great opportunity. So now we've got ourselves in a pretty good situation here, right? We know the plan if we go higher. Again, don't be surprised if it kind of fractals off into a smaller channel there, right, as it goes higher. And we know we've got to respect that momentum, respect the bulls on this, but stick to the bears until proven otherwise. Let's keep going. How about some euro right now? Yeah, this is kind of the easy one. You don't need me for this chart tonight, right? It's pretty basic stuff here on the euro. But there's one real important sneaky clue that kind of puts you in the mindset of the traders, which I believe is always the first step in formulating a successful trading plan. 3 big clues on here. One big clue is the bearish momentum. Yeah, unlike the E-minis, there's no question about direction here right now. It's clearly a bear market. What does a bear market tell me? Sell at resistance. Where could I find a level of resistance? How about the top of that channel? Now, the problem I have with that channel, though, is there's just not a lot on there. These narrow channels, they just don't get me very excited. Right? You're going to need to take a lot of trades to make some money on that, right? Small amount of risk. Yeah, it's okay. I mean, it's not a horrible trade, but I would much rather be able to sell at a better level of resistance. For example, like a reversal line there, right? That's a prior level of support that for the most part hasn't been touched yet. And I know what you're thinking right now. Joe, it looks like it touched it to me, buddy, right? Are you seeing some of that? Well, here's the difference though. Look at the size of that candle. Now, here's what big candles tell me, or what I call, right, a blow-off candle, right? A blow-off candle tells me there are a lot of people on faster time frames that probably never were able to get into that trade, right? So anytime I see a market that, again, shows me a test of resistance, but then has this monster candle, right? Do you really think all the sellers are going to sell way down there? I'm sure there are a couple of them, right? But not professionals. The people who really move these markets, where do you think the professionals are waiting for it? Yeah, they're looking at that going, just come right back to me again. Just come right back to me, and I'm not going to miss it this time. So anytime I see a blow-off candle, right? Anytime I see a nice trend and I see this just enormous candlestick coming off the moving average, yeah, I'm sure there are some people who sold the bottom of that candle, but I'm sure there were a lot of professionals, right, like the folks in our trade room who said, I'm not selling way down here. Right? There's no way I'm selling down there. I want to sell high. And so I can almost guarantee you right now, there are a bunch of sellers that have got their orders stacked right up like this, right? Sell, right? I'll bet if you look at an order book right now, you would see a ton of orders just stacked up here right now. They're going, you come back, I'm not letting you out of my sight next time around here. So anytime we see a blow-off candle, what does a blow-off candle tell me? A blow-off candle tells me there are people who were unable to get in at that price, and they're not going to chase after it. They're still most likely waiting there until something changes, right? If it keeps going lower here consistently, then obviously those bears are going to say, okay, guys, let's pack up shop and let's move lower here. And they'll keep waiting for those lower prices, right, to cut, and again, to get that pop so they can sell it back down again. So that's the basic idea behind the psychology of this market right now. So how would that kind of play out here? Well, the first thing would be, we know where to look, right? I'm looking around this 1330 area overhead. Well, let's talk about all different options here. One option would be we go up, back, and up. We draw that trend line across. We use that trend line now for that sell. Which pattern is that? It's the two-legged pullback pattern. Then we can also look for that sell into those stops. What is that one? The failure pattern, right? Failure pattern. Into what else? Into a pullback pattern. And then as we go lower, what was it? Traps. You got it, right? Those trap patterns coming in last, but certainly not least. Two-legged pullback into a failure, into that pullback, right? Into that pullback pattern, into that trap pattern, right? 4 very reliable patterns that all we need to do is just wait and see which one we get. Usually we'll find one, the two-legged pullback or the failure. Usually the pullback pattern, right, and the trap are usually that little bit of frosting on top as we go pummeling lower. Now, what if I'm wrong about this, right? What if we go sideways here? Could easily go sideways. We're sitting right on top of that big round number. What if we go sideways here on this euro? Then what do? Watch closely. Take the size of that range. We don't know how big the range will be yet, by the way. Right? We got to wait for that information coming up soon here. Mark up that high, and that's going to create a 1, right? A 1-to-1, right? What I'm doing is I'm taking the size of the range and then doubling it up, right? I call it a range expansion level. Take that range, double it up. That will find your equal 1-to-1 range expansion, and then use the 2-try rule. 1 try, 2 try, and back down again. We'll let those buyers try once. Let them try twice, right? And back down again. Now, there are lots of variations to this, right? There's an example right there. 1 and 2. 1, 2. Back down again. Same basic pattern we're looking for next up on that euro. Now, last question would be, I don't think we're going to see a reversal tomorrow. Hopefully I'm wrong. If we do see a reversal, what would it be like? It'd be a 1, 2, 3 reversal, right? Got to get that jump. Got to get that jump off the moving average, right? It's not a reversal if it just rallies higher. It's got to hold that pullback. Once we see him hold that pullback, then what? Mark up that high, mark up that high, mark up the channel, and again, look for that pullback, right? We're buying off the low of that channel. Again, that's if the bulls take it. If we keep rolling lower here, what's the plan then? If we keep rolling lower, now there becomes sense of urgency. Now we look for the up, the buyers to fail, and we sell into their failure to go back and retest that low, right? If we do see the market go lower here and it keeps rolling lower, no, we're not going to chase after it, but we will let those buyers try once, let them try twice, get above that trend line, get above that moving average, and then we can sell into those stops, right? do not try to pick a bottom in this market right now. If there's one market I would stay the heck away from the buy side, it is definitely that euro. It is fundamentally and technically getting crushed right now, and so we got to keep selling high as it pulls back above that moving average. Every time this euro goes above that moving average, it's getting socked right back down in, and we want looking for those daring buyers who try to stand in front of it, right, and sell into those stops for tomorrow morning. All right, guys, speaking of tomorrow morning, man, great video for you guys tonight. Hope you loved every minute of it. Hope you learned a lot. Hope you can use it to earn a lot. And of course, we're going to do so tomorrow together in our trade room. We open up every morning, 8 o'clock Eastern time with all of our advanced members here at School of Trade. If you want to join me tomorrow morning as a member of our trade room, register for the advanced classes. They include all the tools, all the video classes. You can learn more about this stuff on my website. I'll put all the links in the description of the YouTube video. Also, if you want to join as a guest tomorrow, I got a free pass for you. Come out and test drive the trade room. Grab that free trial right on the homepage of the website. Call that toll-free phone number if you have any questions. Use that live support if you have any questions. Drop me some questions in the comment section below. And boy, oh boy, it feels great to be back here with you guys and gals. I know I apologize for last week, a bit of a hiatus, right, from the webcam last week, but it feels great to be back with you guys once again. Hope you had a great day today. We're getting ready for another big day here tomorrow in the trade room. No matter what happens, though, be well out there, be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.